Warren Buffett's 4 rules for investing in stocks. Buffett's first rule: vigilant leadership. Find a stock/business that has great management. This goes without saying, but leadership has a compounding impact on a business. Without selecting a great manager, the company will likely suffer over time. Buffett's second rule: long-term prospects. Next, Buffett tries to find a business/stock he can own forever. Now that might sound counterintuitive to many day traders, but the purpose is very simple. A stock is nothing more than owning a business. Think of a stock like a mini business. Owning one share is no different than owning every share because each share is proportional. As a result, you wouldn't want to buy a business on Main Street, only to sell it to another person the next day. That doesn't make any sense. Even if you were able to make a quick profit, you'll pay enormous capital gains for the sale. Investors who don't understand the essence of what a stock is, a real business, have a tendency to trade from day to day. Warren Buffett tries to buy companies he can hold forever because he doesn't want to pay capital gains tax, not to mention he wants to collect all the profits the business is making. Buffett's third rule: stable and understand. Buffett tries to find stocks that are stable and understandable. By implementing this rule, Buffett can generally assess the value of a stock because he can somewhat predict their cash flow and earnings power. For example, if you were going to buy a company on Main Street, would you consider buying a company that made own predictable profits? Or would you find the company that generally produces similar results from month to month? Seems like a simple question when you look at it from that perspective. When a company makes similar profits from month to month, you can assess how much money it will make in the long run and properly assess a price or value. This is why Buffett tries to find businesses that are stable and predictable. Buffett's fourth rule: intrinsic value calculation. You guessed it, Buffett determines a price that he thinks the stock is worth. Think about it like this: would you go and buy a business on Main Street without determining a value that you thought it was worth? Sounds like a crazy idea, right? Well, every time a person purchases a stock on the stock market without determining a value for what they think it's worth, they are doing exactly that. Buying a business with no expectation for its value. Thanks for watching.